Good afternoon and a warm welcome, everybody, to the Payments A Year in Review webinar hosted by Vixio Regulatory Intelligence. My name is Jack Halliday and I'll be running the webinar. Now, before I hand over to today's speakers, Jimmie Franklin and Luke Baker, I'd like to remind all attendees to please engage as much as possible by asking questions in the chat box. Should you have any audio or visual issues or questions during the broadcast, please write a message in the chat box and I will get it sorted for you. Also, I'd like to remind you that today's session is being recorded and a full version of the recording will be sent out after the webinar. Now, without further ado, I'd like to hand over to Luke and Jimmie, who are going to take us for a look back at the payments compliance in 2023 and look at what's in store for the new year. Luke, Jimmie, over to you.
Much.
Thanks, Jack, and hi, everyone. Good. I think we've got a global audience today, so good morning, good evening, good afternoon to those joining us. Hi, Jimmie.
Hello. Nice.
How are you?
I'm all good. How are you?
Yeah, very well, thanks.
Great.
So today we're just going to do a bit of a retrospect, looking back at what's happened in 2023 across the payments industry from a regulatory perspective. And I think it's safe to say, Jimmie, it's been a pretty busy year.
It's been a chaotic year for people in payments. That's what I would say. It's been non-stop. I think everyone's felt it. I think everyone's going to be very excited for Christmas break, wherever they are in the payments ecosystem.
Absolutely. And I think just on maybe to play on that point with a little bit of data. So I suppose powering this conversation partly today is our Horizon Scanning tool, which monitors over 2,000 regulators across the payments industry. And over the course of this year, we've captured over 2,200 regulatory updates, 600 of which we classify as actionable. Now, rather than sit here and go through every single one of those, which I think would see me and Jimmie still sat here well into 2024, today we're going to pick out and discuss some of the more topical and impactful regulatory developments across the payments industry. So let's get into it. And I think I'll start where most people's heads are at the moment. Most, if not every, chief compliance officer I speak to tells me that increasing fraud rates are the thing that's really keeping them up at night. Regulators are obviously taking action here. So, Jimmie, what have you seen from regulators when it comes to tackling fraud?
I mean, in the UK and EU, I think we've seen so much in the last year or so. I think after COVID, there was definitely a bit of a panic because suddenly there was all these headlines coming out saying, oh, all of these people are getting defrauded and we don't really know what to do. And, that's obviously not great for regulators and it's not great for politicians either. So I think that's why it's been top of the agenda, and it's top of the agenda for banks and for payment service providers in general. The problem with fraud is that it's a bit of a whack-a-mole issue. You can introduce SCA, as happened in 2019, and that came in as part of the PSD2 package. But then after that, we have the issue of authorised push payment fraud, and that's been monumental in the UK. I mean, the statistics we see in the UK are absolutely off the wall at times, and I think recently the payment systems regulator, PSR in the UK, did a kind of league table of cases of app fraud, and some of them were quite worrying. The kind of statistics that I saw anyway from some of the providers, particularly the e-money and payments firms, unfortunately. So it's one of those topics I think regulators are very keen to sort out as quick as they can as a way to be able to say, look, we're doing something. In the EU, we've had confirmation of payee be agreed through the instant payments regulation, which has now been agreed by the European Council and the European Parliament. So that'll be something that I think people are going to be preparing to implement in the coming year. We've also had the app fraud requirements that have been consulted on in the UK throughout this year to tackle authorised push payment fraud.
And is this is essentially putting the burden back on the PSP in terms of compensating
definitely
the victim of fraud?
Yeah, and I think that's something that people at times, I think people think that there should be more compensation, there should be a better model of protection. I mean, how are we ever going to get people to embrace innovative payments if they don't feel that they have protection there? But at the same time, there is definitely a bit of a concern at the moment from some firms that there will be a lot of cases of friendly fraud or first-party fraud, where you're going to get consumers, I guess, maybe exploiting the new or maybe even fraudsters exploiting the fact that they will be able to get compensation a lot easier than perhaps beforehand.
Yeah, that's really interesting, and I think that that brings in a whole load of new ways of thinking when it comes to risk, and because
Mm,
suddenly it's about financial risk as well as reputational risk for these businesses. It also
definitely.
makes me think of what's happening in Singapore. I think in a similar vein, where you've got the shared responsibility framework,
Hmm.
and Singapore are rolling out a scheme where which may result in PSPs having to compensate potentially up to 100% of the fraud.
Hmm.
Um, and I think what we've heard from our analysts is that I think the steps you can take if you're a PSP in that region is following all the proper cybersecurity, sender ID regulations, and registering where you need to.
Absolutely, and I think Singapore is quite interesting. Again, like if you look at the build up to them consulting on the shared responsibility framework, there were loads of parliamentarians putting questions to Monetary Authority of Singapore, which is the financial regulator over there, saying, "What are we going to do about scam losses? What are you planning to do? How are you planning to help consumers?" So there was that pressure there. What I think is quite interesting with Singapore is they've done something where they've said that telecoms companies are going to have accountability and could also be liable for the compensation. And that's something that payments firms in the UK, banks have been lobbying for constantly. I mean, I've seen so many letters that have been published in the last year or so, and so many studies looking at the fact a lot of this fraud starts on social media, starts with telecoms companies. I think it'd be interesting if Singapore does go through with that, because then it will show that the accountability, and I think that a lot of payments firms would welcome this, is shifting away slightly from them in those situations where they can't really help it that much because of the way the fraud is starting. Now, we have seen that starting to happen in the UK and the EU as well. The UK recently published its online fraud charter, and the UK obviously released its action plan for fraud. I think it was in April this year. So I think it's been on the agenda to kind of try and rein in telecoms companies and social media firms when it comes to fraud and fraudulent payments. In the EU, recently we've had the review of PSD3 or PSD2 rather, and that's obviously led to PSD3 and PSR being proposed in June of this year. What we have had happen since then is the European Parliament has put down its amendments for PSR, and some of those amendments included holding social media firms more accountable
Right.
and financially liable for fraud, which is huge, really. And I think a lot of payments firms will be very, very happy if that goes through, because that would be quite a big step change.
And on the topic of the PSR, I think it's generally been welcomed across the continent, right? And I think it kind of simplifies
Mm.
the the regulatory arbitrage, if you like, that was there in
Definitely.
PSD2.
It definitely does some of that. I think, the fact it's going to be a regulation takes away that issue of like the directive being implemented and legally interpreted completely different across the EU. I think the EU kind of learned its lesson with financial regulation when it comes to that, because with the AML directives, for example, they were never able to get them right, and now they've moved to anti-money laundering regulation instead. With the PSR, I think people are going to be really happy with the fact that it's definitely trying to improve the open banking situation, which will be really handy for the kind of fintech firms that have kind of grown out of PSD2, for example, but feel that they get a bit of a bad situation with the banks when it comes to application program interfaces. The requirements there are much more stringent now, and I think that once that goes through, a lot of firms, they can be pretty thankful. Maybe not the banks, but I think the firms will be for sure. And then there's the open finance regulation on the side of that as well, which offers a lot more opportunities. And who knows, maybe could mean a lot of firms that we had kind of grow out of PSD2 could grow even more, and we could get even more firms innovating through that. So it's good
And
regulation.
they talk a bit in there about premium APIs as
Hmm.
well, right? So what would that look like, do you think, from a bank's perspective?
So I think, and that's been something that's been quite divisive, I've noticed, since it got released.
Yeah,
This was the financial data access regulation. And with that, what it would mean was that banks would be able to get compensation for offering data. And that would be a bit of a step change from it all being free, as it is with open banking, but obviously is remaining free. I think there are going to be some premium APIs with open banking. So with variable recurring payments, for example, that will come at I think it's going to be able to be compensated. But yeah, that would be the big difference. And I think the fact that there will be compensation might make the banks more incentivized to improve the situation for offering these APIs.
And whilst we're on the topic of open banking, I know there's been a few developments this year that I think generally have been widely welcomed. I think most recently in the US, you had, I think it was mid-October, the CFPB release a rule allowing customers or consumers out there to have rights over their data access, which essentially lays the groundwork for open banking in the US.
Definitely. I mean, you have seen a few commercial developments in the US with open banking. For example, Plide has done pretty well, but there isn't the kind of regulatory push there, or there hasn't been the regulatory push there, but there has been in Europe for so long. And I think when I've spoken to people in the US, they have often said that they feel like they're falling behind slightly because of that, and the innovation maybe isn't there in the same way as it is in the UK and the EU. Not to say that it's been perfect in the UK or the EU, but yeah, with the personal financial data right, which has been proposed by the Consumer Financial Protection Bureau in the US, that should open up the roadmap at least as a starting point for open banking.
Yeah.
It's a bit piecemeal in comparison to the regulations in the EU, but I think considering the differences between the regulators in the EU and US, I'm not that surprising. So I think people are pretty happy about it.
And then north of the border, Canada, I think the industry's been celebrating that the government's brought forward a rule. Is that right? I remember you publishing a story on that.
And I mean, I think with that, it's a bit of a sigh of relief because it's been a long time that Canada's been waiting for this. I think it was like 2016 when it was first proposed. So they've been saying that they're going to do this for a while and just haven't been able to get on with it. Just before the announcement was made, loads of the fintech firms were sending in or like putting out open letters and campaigns to try and get the Canadian government to commit to it. Now they have. And there will be open banking rules coming in. I think it's next year, so it's going to be pretty quick now in terms of what they want to introduce. And also, I think they've gone a bit further than the US in the fact that they are looking at granting access to payments institutions and money institutions to payment systems, which has happened in the UK and will be happening in the EU as well quite soon.
Right. Okay. And then I think Australia also, I think you mentioned recently, Australia also sort of been working on their open banking regulatory framework as well.
Yeah, and in Australia it's called the Consumer Data Right, and I think they've kind of got to banks and energy firms now. So they're doing it slightly differently to what the UK and EU have done, but they are gradually kind of making their way of opening up access. And people seem pretty happy so far with the Australian way of doing it. I think I've seen a few people on LinkedIn saying they'd like that to be the case in the UK. So I think people are relatively happy with movement so far.
Right. And whilst we're on the topic of Australia, I know we've got an analyst who covers that region, and they've been one of the busiest, I think. I think what we're seeing is in 2024, the Australian government plans to introduce a new licensing framework for PSPs. I think there have been mixed reactions to the consultations. Just looking at the replies, the likes of PayPal and Visa have sort of welcomed the reforms in general, but kind of asked for further clarity on some points. And sort of more alignment with what happens in the UK and the EU. I think that's always going to be difficult to get alignment across different jurisdictions. I think it's also really the root of why it's so challenging, right, to stay on top of all of this. I think there are some more incumbents in the market that have previously not been subject to regulation that now are. So naturally they're slightly more reluctant to welcome this in. Not sure if there's much else you can add to that there.
So I think with a lot of the regulation that gets introduced for payments firms, it's still a pretty nascent area. It's an emerging area really a lot of the time, and they're not used to the stricter regulation that perhaps financial institutions that have been around for decades are used to. And I think that's why it makes it more challenging when suddenly they're hit with loads of, regulatory plans, which can be, it can be beneficial at times. And I think the Australian example is the fact that they are trying to encourage more innovation with a lot of the stuff they're doing. I think they're trying to encourage more payment options, such as with, I think it's called EFTPOS or EFTPOS in Australia, which I saw a study recently that says only half of Australians know what it is, but at the same time, it's offering an alternative, trying to increase competition. So yeah, I think it depends really with regulation. No one ever likes to find out they're going to have to deal with new rules, but often it's for, there are reasons why it's being introduced.
Yeah, and I think at the root of that, it's like I think everyone can agree that if there's clarity around those regulations, that they're generally welcomed. I think on that note, in particular, we look at MiCA, right, in Europe, which brings in new regulatory requirements for the crypto sector, and maybe a few years ago, that maybe wouldn't have been welcomed as much as it is now, where there's so much uncertainty. What have you heard from people on MiCA specifically?
So everyone is really happy that there's going to be a regulatory framework for crypto, and it's pretty groundbreaking. I mean, the EU has jumped quicker than other jurisdictions, for right or for wrong. But I think that will be very beneficial to the EU in being able to hopefully create a crypto market. And I think it offers opportunities. People know where they stand with this regulation, which they didn't beforehand. And everyone, I think there was a lot of distrust anyway with crypto from a lot of the regulators in the EU. So hopefully having a regulatory framework and more consumer protection will mean that politicians and regulators are more willing to embrace crypto than perhaps they have so far.
Yeah, I think it's quite the opposite in the US at the moment, right? Where nobody can actually really agree on what a crypto asset is. Is it a security? Isn't it a security? And there was a landmark, I suppose, case earlier this year with Ripple, where they kind of settled on, okay, it's not a security if you're selling to consumers, but it is if you're selling it to institutional investors, which I think was like a semi-win for the industry. Certainly, if you looked at the price of the coin, it seemed to look like a win. And I think in the UK as well, certainly the Prime Minister here is pushing for the UK to be a bit of a crypto hub, right? So I think early next year we're expecting more regulation around crypto in the UK.
Yep, and I was going to say, I think there's a bit of a disconnect, let's say, between the Prime Minister and then some of the regulators in the UK. Because I would kind of throw it out, but I don't think that the FCA is that big a fan of crypto at all, and I think that they have quite a lot of distrust of it at the moment. But then with there is regulation coming up, and the Bank of England and the FCA have been working on plans, in particular for stablecoins. I think people, again, may find that good, but at the same time, I have seen some people saying, or warning rather, that the stablecoin plans, or at least to kind of define them, would make it incredibly challenging for any stablecoin issuer globally to actually be accepted into the regulatory sphere.
Right.
So I think at the same time,
some people are calling it over-regulation, right?
Yeah.
Or saying, do we, for stablecoins are such a small part of the ecosystem, at least today. Do we even need a big piece of regulation like this at the moment, or is it overkill?
I mean, it could definitely turn out to be overkill. We don't know yet. We don't know what's going to happen with stablecoins. They've obviously been on the agenda, I think, since the first time I remember hearing about them was when Meta was going to, or then it was Facebook was going to release Libra, which then became Diem, which then disappeared. I mean, that led to a lot of paranoia from regulators. I mean, we got the central bank digital currencies come out of that. I was watching a European parliamentary hearing the other day, and someone mentioned, we need to have this regulation. We need to have a digital euro because of the threat of something like Libra coming in. And I was like, no one's called it Libra in years, but in fact, it's still on people's minds. I think people are very kind of nervous about something like that happening and undermining the central banks.
And the digital euro, I think, it's kind of anticipated that other than China's kind of sort of domestic CBDC, it's probably going to be the first widely used one that's, I suppose, international, you could call it. But you think there's probably been mixed reactions there in the industry?
100%. I mean, I think that the EU has shown it's more enthusiastic about a possible CBDC than a lot of other jurisdictions. You look at the US, for example, it seems like the notion of a digital dollar is a long way off yet. In the EU, I mean, they haven't formally committed to rolling it out, but they have at the same time. It's quite confusing, their messaging sometimes, but we've got the ECB, which are looking at the design phase now. And then we've also got the European Commission, who have proposed at the same time as PSD3 and PSR, a digital euro legislation. So I think the issue is that they want it to do a lot of things. I think really they want it to kind of be a bit of an alternative payment method to some of the big international card networks. So fulfilling one of the big ambitions of the EU to have like a EU payment system or a EU payment option, which hasn't been so far. And then at the same time, I would say that everyone seems quite unclear on what they want it to do. So some people are saying, oh, it should be a wholesale CBDC. We don't need to have a retail CBDC, which is at the moment. And then you also got other people saying, oh, well, in this case, we should have like unlimited holding deposits for a CBDC, digital euro. And then that would mean that we could deregulate the banks slightly. So I mean, everyone's got like different ideas. Some people are saying that they are going to have like cards come from digital euro. Others are saying it's going to be just a mobile option. So I think there's still a lot of questions that need to be answered. I think we're probably looking at around 2027 earliest, I reckon, for digital euro.
I think slightly ahead of that maybe then is Singapore, where I was talking to one of our analysts that's there recently, and he said they were kind of doing experiments with it, but the narrative there's slightly different in that they're essentially just calling it programmable money.
Yeah, well, everyone's just interpreting CBDCs in a different way. I mean, like the retail CBDC in the EU is very different to, I think, the idea of like a digital pound. So everyone's got completely different ambitions with what they want to do. And then there's the question of whether consumers will actually want it. I mean, it could, so far, even with the
it's
pressure.
It's a bit like open banking, right? It's like, why would I use this if I've got this? It's the same kind of thing.
100%. I mean, we're creatures of habit, aren't we? So I think looking at something like that is going to, I don't necessarily know if there's going to be the incentives there. And do you think that like the European Central Bank is going to be able to create like a really innovative mobile app, let's say, to be able to put this CBDC on? I think it's going to be, there's a lot of questions that still need to be answered.
Yeah. Okay. And just whilst we're on the topic there of Singapore and just sort of generally Asia, one thing we've certainly noticed this year is the number of cross-border payments linkages that have been established, and that seems to be a bit of a trend there to try and make the financial ecosystem across different land borders in Asia more interconnected, which I think generally is welcomed, obviously by consumers, but I think by merchants certainly, and payment system operators as well. Maybe an example is the recent linkage between Singapore and Malaysia, which I think is one of the busiest land border crossings in the world. So you have about 350,000 people a day crossing that border. With this new payment linkage, I can essentially go into Singapore with a Malaysian bank account and pay a merchant with a QR code. And I don't need to, or I can send money to someone that has a Singapore bank account or vice versa without having to use a relatively slow and expensive cross-border remittance firm. So there are certainly upsides there. I'm sure that there are probably some downsides there for possibly those remittance firms who have made money out of the absence of such a linkage. But I think it comes back to the point that you need to be aware of this stuff, right? Like if you're not aware of it, then you're kind of flying blind, so to speak.
No, definitely. I think with there's been a huge push internationally on cross-border payments. I think it's the G20 that have been wanting to improve the situation with cross-border payments, and the Asian countries have done exceptionally on that. I think they're some of the most innovative markets for payments so far, and you can really see the ambition with the amount of linkages that have been announced in recent years.
Excellent. Where should we go next? I think one of the things we've seen in Japan, it's quite interesting. So the EU and Japan have established this free movement of data. The way I understand that is that you no longer need to have sort of data storage locally. It could be in either of those sort of jurisdictions, which is kind of the opposite to India, right? Where they brought in relatively strict data localization laws that they flip-flopped on a little bit over the past few years. But I mean, the general consensus there is if you have Indian data, it needs to be stored on the server in India.
Mm-hmm.
That's my interpretation of it. I think what we're seeing with the Japan and EU linkage is that one of the concerns, I think, is where Japan's regulatory regime for data protection is slightly more permissible than GDPR. So it may lead to people, gaming the system a little bit, but I think there may be consultations on that will address that. The other thing in Japan, of course, is 3D Secure, which is essentially Japan's answer to SCA. Again, I think it's one of those measures really there to improve authentication, tackle fraud, etc. And so I think March 31st, 2023 was when they released new guidelines, which essentially mean all members of the credit card security ecosystem are essentially required to implement EMV 3D on all transactions. So again, I think it'll be interesting to see what some of the impact of that is. Like I know they're in the EU, SCA had sort of mixed reactions, and it's been a learning curve.
It really was. I think people really struggled at first with SCA, and I think there was definitely a lot of panic from different parts of the market. People found some of the requirements quite stressful to actually deal with. I think some of the kind of situations for getting, or like some of the processes for SCA were quite clunky as well. So that made it a bit of a nightmare for consumers and also merchants. I think a lot of merchant trade associations I spoke to at the time were really panicked about the impact it could have on like their shopping and traffic going to their websites if they had like a really clunky SCA happening.
Yeah,
But people have adapted to it quite quickly, and I think people see. I think that SCA is being built on in the UK and EU for better, because we've seen certainly a lot of commitments to improve the digital inclusion element of it. At the moment, it's very focused on smartphones, but both the European Commission and the UK FCA, via the Consumer Duty, have said that that needs to change and that there does need to be options for people who don't have smartphones to do strong customer authentication.
absolutely. Now you mentioned Consumer Duty there, so maybe that's a good thing to pick up on next. I've read a lot about Consumer Duty over the past year. I think there's a bit of a theme that people got caught out by this.
It's a very different kind of regulation. It's focused on good outcomes. I mean, I've seen people call it vague, other people saying, why are payments and e-money firms actually in it? There was definitely a bit of unhappiness about the fact that payments firms were going to be in scope. I think the reason for that is that a payments transaction is over very quickly. It's very hard to assess what a good outcome is for that. It's very hard to look at like a payments product and think, how is this, focusing, or how is this tailored to the consumer's needs in a way that it's probably a bit easier if you're, let's say, it's like a mortgage or a pension or an investment. Like those things, I think are a lot easier, really, for to have something like this placed on them.
So is it the confusion that people really didn't know what they were actually aiming for? Is that where this comes from? This,
I think so. Yeah. I mean, like, the FCA was quite supportive at times. They did release a DSCO letter targeting payments and money firms, showing them what the kind of stuff that they need to do to be able to comply with Consumer Duty. I think there will be a bit of breathing space before they start taking tougher action. Let's say I think it'd be interesting to see in 2024 whether the FCA decides to start acting against firms or industries on what they're doing with the Consumer Duty.
and Consumer Duty, I think, comes in. There's a second part of it that comes in next year, right? For closed products, or
yeah. So their products pretty much. I think it's products that have expired. So I don't know if that part will be as relevant. I think the big deadline was this year, so people now are in compliance with it. I was hearing all these stories of people having to cancel their summer holidays to prepare for it and things like that. So it was quite a scary thing, I think, people to get used to. And yeah, I think
not inexpensive either, right? Like,
absolutely.
was it? I think I read something from the FCA saying almost like the smaller firms had to incur larger costs to bring themselves up to speed.
And I think with payments firms as well, they're, as I said, like they are relatively new to the scene. They haven't, perhaps with some of the kind of more established sectors, they're going to be used to this kind of regulation. They're also going to have had it through their like trade associations, for example. Like trade associations often release guidance and certifications that people can obtain if they want to be part of a trade association, which I think is relatively similar sometimes to the outcomes that the consumer duty wants. And it'd be interesting to see as well whether we start to see regulation like the consumer duty being introduced in other jurisdictions. I think I saw recently New Zealand has now got an outcomes focused regulation that they're consulting on. So, yeah, we'll have to keep an eye out for others as well.
There's definitely a trend wherever you look, I think, towards tighter consumer protection regulations in general. I think a lot of it is crypto related, right? Like in the
Yeah.
UK, we've had the financial promotions, crypto asset promotions regime. Thailand has got a pretty strict new requirement for crypto firms advertising there, which is essentially the Thai SEC has issued guidelines on information disclosure and risk warnings that firms have to put on their websites, and this even includes essentially like how healthy is our business, and putting that on your website. Like that's a big step to say, you know, we've been around this many years, this is our revenue, this is our profit, etc. Whether you have to go that far, I'm not 100% sure, but essentially that seems to be the case, which yeah, I'm not sure the UK's gone quite that far, but it's very much around, it's a bit like cigarettes, right, where the warning labels are now on the packet.
Definitely. I mean, I think consumer protection is definitely 100% the focus of the FCA and other regulators as well. I mean, it's a low hanging fruit in many ways because you can kind of sign up and be like, we're doing good stuff through having consumer protection as a like your main focus.
Yeah, absolutely. Now, just thinking about where else we've seen some impact this year. So, in India, I think something that was broadly welcomed was on the 11th of August. We saw that India finally passed its Digital Personal Data Protection Act, which is, you know, you could think of it almost like the Indian version of GDPR. I think this was a long process, 3 or 4 quite big drafts, and essentially it now provides comprehensive regulations on the collection, storage, processing and transferring of personal data. It also establishes a new data protection board as the primary regulatory authority there in India. I think before this, there were sort of scatterings of bits of regulation throughout other regulations in India. So now it in theory, should make it a lot more clear and concise around, okay, what is it you can and can't do with personal data in India.
Definitely. I mean, with like data protection regulation, I think we're still seeing the I don't know, like after effects of the GDPR. Like that, ever since that was introduced in the EU, that really has been a like staple really of data protection regulation elsewhere. We saw it with a couple of US states. I think New York and then California jumped as well. Australia introduced pretty similar regulation. Brazil basically cut and pasted the GDPR for their data protection regulation. More than anything, it's probably a bit of a trade issue. Like a lot of these companies want to be able to do seamless data transfers. And once you're dealing with like a big market like the EU, you probably do need to have standards to that level.
And was it the UK and US cross border or EU US cross border?
Trends too, yeah.
Yeah. And before that, you saw, was it Meta? It was this year, right? They got a record fine from the Irish data protection regulator.
And I think that these kind of big fines will carry on happening. It's not an easy thing to comply with GDPR. I think still it's not really business as usual for a lot of firms. They don't really like firms I've spoken to in the past are pretty scared of it because it's such a big piece of regulation and there are such kind of like huge fines that can be put down on people because of it.
Excellent. Now let's talk a little bit about FATF international standards. We've seen a bit of movement there in terms of countries coming under increased monitoring, other countries coming off of increased monitoring. So I think most recently it's Bulgaria, right? That's now subject to increased monitoring. What can you tell us about that?
Yeah, I mean, I think with the FATF, it's I mean, one thing that's definitely a big theme that I would say I've noticed quite a lot is the fact that EU countries are starting to go on to the Financial Action Task Force's grey list, which means that they are being seen to not be up to standard, and that's not good for the EU to have to deal with, because it makes them seem like they've got really bad anti-money laundering laws. Because why are the likes of Malta or Bulgaria going onto the FATF list when they're supposed to have these really high standards of regulation? So that is definitely something that I think we've started to see happening more since 2021, when Malta went on, the first EU country to have happened too. I think we're likely to see it with others as well.
Croatia, I think, on there as well.
Croatia on it as well, and I think there's been talk about some other countries as well. I won't name names, but there are others that could be likely to go on it at some point. I think the impact of FATF depends. Sometimes it can have a bad effect because it gets you a bit of a bad name suddenly, but then you might have that bad name already. That's why you're on it. So, and actually, it could even be seen as like a success. Like, I think a lot of people really respected Malta for the fact it was on it for such a short amount of time. I mean, they really jumped as soon as they were put on the grey list.
And I think from the European Commission are very confident that that's going to be the case with Bulgaria as well, right? Like, I think they're already complying with the majority of the kind of red flags, so to speak. They've already addressed a lot of them.
Yeah, and they will have pressure to act faster as well. So yeah, I think it will end up with, hopefully for Bulgaria, a relatively quick getting off the list.
Yeah, which is good because it shows that they're taking this seriously, right? I think it would be a real concern if nothing changed.
Definitely.
Now, hopping across the pond a little bit to the US, I think that there's sort of two big things other than the recent open banking announcement in the US. One of them is the Model Money Transmission Modernization Act. Now, this is very welcomed because for those that have either been operating in the US or are looking at the US, you have 50 different states with 50 different ways of doing licenses. This is essentially there to harmonize this as much as you can in a regulatory environment like the US. So essentially, it's got a lot of positive attention. It means that there's essentially a lower regulatory burden now when you're entering the US, or you're having to continuously stay compliant in the US. And so today, 18 states have enacted at least part of the model, and another 6 have something pending with state level legislators. I think we'll see a lot more adoption throughout 2024 as well. And that's quite a big step in terms of where the US has come from in a relatively fragmented regulatory framework.
Yeah, absolutely. I mean, the US seems to I find the framework quite dizzy at times of how people actually manage to comply with 50 states and apparently different laws. So yeah, hopefully that is able to deal with some of those problems when this does get introduced. I think one of the things I have seen with the US is that, as I was saying earlier, they don't, like, people from Europe have started to notice when they go over there that the system for retail payments is not as perhaps user-friendly as it is in the UK or other parts of the EU. And I wonder whether there's going to start to be pressure, or the US is going to start to feel pressure to try and modernise that at all. And so it'll be interesting to see whether, the fact that has been more action taken recently, whether it's the Model Money Transmission Act or it's the CFPB's open banking proposal, whether these actually help move the innovation.
Yeah, absolutely. And the other thing that I think is quite interesting, and this isn't, I think what I'll talk about, this is exclusive to the US, but I've definitely seen this theme in other parts of the world where there is intention from regulators to tackle automatic subscription payments. I think there's a bit of a sense that some subscription payments aren't being utilized. Essentially, you're paying for a service, you're forgetting that you're paying for it, and then you're essentially paying for nothing. So I think there are some stricter automatic renewal subscription laws coming in the US. So far, I think 18 states, like if you were to go into Vixio's Horizon scanning tool, you would see that there's been about 18 states over the last year that have been working on this and putting this through. And essentially, it just means typically additional communication with consumers. when it comes to automatic renewals. Now, this obviously impacts merchants directly, but I think it has a knock-on effect as well to payments firms that work with them.
Mm. Yeah, I mean, it probably does because subscriptions. I've noticed that in the UK as well. I think the Online Safety Act was the one where they wanted to take on subscription payments, and then in PSD3, there's some like discussion about subscriptions. I think they want to be able to say to people that they can cancel after like 8 weeks and still get like compensation for it,
Yeah,
which is a huge headache for any firm to have to deal with. That's a real step change. So yeah, I think it is an issue, and it probably will hit payments firms as well if they're getting some of the kind of like how do I say, more like third party impact of these regulations.
yeah. And then you've got that sort of where you've got this trend towards more authentication that, of course, creates friction in a, ideally frictionless payment. So when you had like the likes of SCA come in, what does this impact subscription payments, recurring payments or not? I think the biggest impact we've seen was in 2020, 2021 with the India's RBI rule and the recurring payments mandate that all of a sudden you had to validate recurring payments, which isn't great news if you're relying on a frictionless payment. I think what's really interesting as well is whilst we're on the topic of recurring payments, we all know Pix has been a huge success in Brazil, right? And earlier this year, it was announced by Carlos Brandt, the kind of the godfather, if you like, of Pix, that from next year there'll be Pix Automatico, which essentially is leveraging Pix for recurring payments. And you think about utilities, subscription companies, all types of services that can now benefit from the relatively lower fees, processing fees, compared to relying on cards. I think that's been broadly welcomed as well.
Yeah, absolutely. I mean, with Pix, it's a real blueprint for other countries. I've heard people in the UK talking about how they want to have something like Pix over here. Pix and UPI in India seem to be the ones that everyone bangs on about quite a lot as a real success story. I guess it hasn't been without its flaws. I remember there were some issues of fraud, but it seems to be that they are dealing with that and improving it. And I remember like Pix was the first thing I brought up to my housemate's Brazilian partner because I was so keen to get an insight into what actually happens with it. So it's definitely something that I think is definitely like it's a success story, a bit of a Brazilian champion. They are also, I think I saw Colombia are going to be kind of
doing
creating
something
their own
similar.
kind of Pix. And I wonder if we're going to start to see something like Pix linkages happening across different countries. If other countries get something like Pix, I don't want to like advise Pix on what they should do next, but I think that could be quite beneficial.
Absolutely. I think that's more or less it. I mean, we could talk for probably months non-stop about what's happened simply just in 2023. Jimmie, before we say goodbye, is there anything else that comes to mind that we've missed?
I think we've covered all of the big spots for payments, really. I think the only thing I would mention is Dora, because I think Dora's been crazy. Everyone's definitely in preparation mode now.
Yeah.
So I'm intrigued to see what happens next year in terms of people getting prepared to deal with
people
Dora.
Have essentially got another year, right? It's January 2025 when that comes in.
And that comes around fast with these things. So I wonder when we're going to start to see people pressing the panic button with that. But
absolutely.
That's pretty much everything.
And so we'll finish on the note of regulatory deadlines in 2024. And I just had a quick look in our regulatory horizon scanning tool. Essentially, you can create a calendar just to see which pieces of legislation relevant to the payments industry are coming into effect. So just on the 1st of January 2024, there are 33 new pieces of regulation that come into effect on that date. Now, I won't go through all of them, but if you're in Spain and you're a crypto company, there are new reporting requirements. Latvia, there are new laws for money laundering, beneficial ownership in the US, several new payments laws in Lithuania. Poland is now, the KNF in Poland is now supervising lending institutions. There are new requirements for DASPs in France. There are new AML regulations in Estonia. There is a new pricing structure for tips. There are new rules for the collection, storage, and provision of data on international payment transactions in Lithuania. New PIX regulations in Brazil. Indiana, is adopting the Money Transmission Modernization Act, and the list goes on and on and on. So regulation never stops. I think that's why we're in business.
Exactly.
And if you're a subscriber, speak to your account manager about how you can tap into our regulatory intelligence and make sure you're on top of it. And if you're not a subscriber, feel free to get in touch, and then we can help you make sure you're not missing any key regulatory updates. But from me, goodbye. Thanks for joining. Thanks for your attention, and good end to the year.
Thanks very much, Luke. Yeah, thanks everyone for joining.
Thank you, everyone, for attending today's webinar. Thank you again to Luke and Jimmie. As mentioned at the start of the session, this webinar was recorded and a video will be sent to all attendees in the coming days. Now, before I sign off, I just wanted to tell you about an upcoming webinar. On Thursday, January 30th, Jimmie will be moderating a Vixio webinar called The Compliance Dilemma, The Growth at What Cost? That will feature speakers from Sidley Austin and TrueLayer. So you can register for that webinar on Vixio.com, and we look forward to seeing as many of you there as we can. If you have any questions about anything discussed in today's webinar, as Luke mentioned, if you have an account manager, then please feel free to reach out to them. If not, more information can always be found on our website, Vixio.com, or email info@vixio.com, and someone will get back to you as soon as possible. All that leaves me to say is thank you again for attending. Look forward to seeing you in the next webinar.